Bitcoin was ripping on Friday. We saw Bitcoin head from around $60,000 to $65,000 at its peak of its run. There are a couple reasons why Bitcoin headed higher yesterday. For one, we had Fed Chair Jerome Powell speaking in Jackson Hole, Wyoming, where he announced that the Federal Reserve is looking to shift their monetary policy, signaling rate cuts. The markets like that, and Bitcoin like that. We also saw that Robert F. Kennedy Jr., independent presidential candidate, suspended his campaign for president while endorsing former President Donald Trump. Now, this is a big deal because Donald Trump is a pro-Bitcoin candidate. He wants to see innovation in the Bitcoin space here in the United States. And with RFK Jr. dropping out of the race, this has boosted Donald Trump's probabilities of winning the election in November. So I want to break down these two catalysts that we saw yesterday in this video. Before I do get into the video, please make sure to hit that like button and that subscribe button. Really appreciate your support. Let's get it. Jerome Powell announced that the Fed is looking to shift monetary policy yesterday in his speech in Jackson Hole, Wyoming. As we know, the Fed has been on a pretty intense tightening cycle with their monetary policy. The Federal Reserve raised the federal funds rate at the fastest pace in history, from 0% to between 5.25% and 5.5%. Now, although we haven't seen the Federal Reserve raise the federal funds rate more at some of our more recent Fed meetings, we have really started to see signs that the economy is slowing, and it's slowing fast. If you've been following the news, you know that bankruptcies have been snowballing. Every day I'll be at work and I'll click my little news icon, and when I click it, it shows that another company has filed for bankruptcy. Some recent companies that I've seen that have filed for bankruptcy include SunPower, a solar company, Buca di Beppo, an Italian restaurant chain, and LL Flooring, a flooring company. We've also seen increased layoffs. A lot of these big tech companies this year have been laying off employees left and right. Recently, I saw that Cisco laid off thousands of employees, around 7% of their workforce, and this is just one example. We also saw with our most recent unemployment data that unemployment ticked up from 4.1% to 4.3%. And this triggered the SOM rule, which is an economic indicator which tells us that we're either in recession or close to recession. When the SOM rule is triggered, it's basically telling us that the percentage of Americans who are unemployed is rising fast, and it's something that we should be alarmed about. And if you want the technical definition, go ahead and look it up. We also saw a little flash crash a couple of weeks ago in the beginning of August where stock prices declined sharply, and this was around their July Fed meeting. And after they decided not to cut rates in July, we saw stocks react negatively. We also had a bad jobs number, and we got that unemployment number, and it looked like we were about to head into a significant market correction. We rebounded pretty quickly from our short sell-off, but there certainly was a lot of fear in the markets. Now, there were other factors at play. We saw Japan raise their interest rates very slightly, and the market reacted very negatively as people were selling into yen and selling out of other currencies and other assets. We also saw escalations in the Middle East conflict around the time of that Fed meeting. So there were kind of multiple factors converging at once, which led to all this fear in the markets and to this sell-off. And I believe some of this fear is still out there. People can see this economic data that is coming in the United States that's showing that the United States economy is not doing that great. So I think at this Jackson Hole speech in Wyoming, Jerome Powell is really trying to take some of this fear out of the markets. We saw markets rebound, but could we see some sort of other catalyst that could lead to stock markets selling off like they did a couple weeks ago, or Bitcoin selling off, other assets selling off? Maybe the Bank of Japan makes an unexpected move, or maybe we get another escalation in this Middle East conflict. So I think the Federal Reserve really wants to keep markets steady heading into this election. And that's why they came out yesterday and basically announced that they are going to be shifting their monetary policy. And what this did is it signaled rate cuts to the market. And that's why we saw assets respond positively. If we look at a chart of the S&P 500, it wasn't up super big, but it looks like it was up over 1% on the day. You could see it ticked up here to 5,634 points. We can also look at gold. Gold had a solid day, also up over 1%. And then you look at Bitcoin, which was the real winner of yesterday, and Bitcoin was up big. It went from around $60,000 to $65,000. I believe it's currently sitting around $64,000 per Bitcoin, but we could see Bitcoin had a big day, and that's probably because Bitcoin had another bullish catalyst. Along with the news that we got from Fed Chair Jerome Powell yesterday in Jackson Hole, we also got news that RFK Jr., independent presidential candidate, has suspended his campaign for president, effectively dropping out of the race. While he did this, he also came out and endorsed Donald Trump for president, which is a pretty big deal. This has most likely increased Donald Trump's probabilities of winning the election in November, and it will be interesting to see if Donald Trump maybe looks to appoint Robert F. Kennedy Jr. somewhere in his cabinet. I think that would be a power move by the former president, and we will have to see what happens there. But why is this a big deal for Bitcoin? Well, we know that Donald Trump has come out and voiced his support for the Bitcoin space. Now, while Donald Trump is probably supporting Bitcoin mostly for votes to win the election, he knows that there are a lot of Bitcoin holders here in the United States, and he can appeal to those voters by saying he's going to support this space, right? And he's going to support Bitcoin businesses, Bitcoin miners. And I do think that Donald Trump will be the better president for Bitcoin, because we have seen the Democratic Party act hostile towards Bitcoin, and they see Bitcoin as a threat. We know that the Democratic Party has also endorsed the idea of a central bank digital currency, which is a scary thing and not something that the Bitcoin community wants, right? Aside from Bitcoin, many people believe that Donald Trump is probably going to be the better president for the economy, or at least the stock market, due to his economic policies. He is a proponent of less taxes and less regulations, and that's something that businesses like. They want to be able to operate freely without interference from the government. And if they're paying less in taxes, that means that they are able to profit more and potentially grow more. Anytime that we get a catalyst which boosts the probabilities of Donald Trump winning the election, we see that asset prices respond positively. And that's what we saw yesterday. That's what we saw a month and a half ago with the assassination attempt. That boosted his probabilities of winning, and we saw the markets head higher. When we saw that Biden was replaced with Kamala Harris as the Democratic nominee, we saw asset prices head down because we saw the probabilities of the Democratic Party winning the election rise higher. So that's something interesting I've noticed over the last couple of months. It will be interesting to see what happens in this election. We are a couple months away. We just saw the Fed come out and say they're going to shift monetary policy. Are they going to cut rates in September? And if so, by how much? While these Fed policy decisions do impact the economy, especially in the short term, as we see asset prices react, it's important to remember that what's really driving inflation are the deficits and government overspending. When we overspend, when the government spends more money than they take in through tax receipts, they eventually have to introduce more liquidity into the market to buy that debt as they continually go into larger portions of government debt. So although it is the Federal Reserve's mandate to manage inflation, I really don't think they can impact inflation long term. I think inflation is going to continue to persist. And with that, we can expect asset prices to head higher, at least most asset prices. And we can expect lending rates to head higher as well, as lenders look to earn a higher yield than the inflation rate. That wraps it up for this video. It will be interesting to see where the Bitcoin price heads over the next couple of weeks. Like I said, we're sitting around $64,000 per Bitcoin right now. And I'm also keeping my eye on the markets in general. We could see asset prices decline further if we get more bad news for the economy. And also, just with all that uncertainty out there right now, we could get some more unforeseen catalysts, which could impact the market negatively or positively. So I'm keeping my eyes on the markets, keeping my eyes on Bitcoin. If you're interested in getting exposure to Bitcoin, check out my Swan Bitcoin link in the description. When you use that link to sign up today, you can get $10 off your first Bitcoin purchase. Not a bad deal. Check it out below. If you didn't like and subscribe, please make sure to do that now. Again, really appreciate your support. Thanks for watching. I'll be back soon.